Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need. Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. We've got an awesome guest with us today. His name is Ming. He's the president of Volition Properties. He runs a team in Toronto, real estate agents that work specifically with investors, helping them to solve all their issues in Toronto as far as making sure that you can find cash flowing properties and you can still make lots of money in Toronto. So Ming is going to touch on that. But before we dive into that, I would just love to hear your story on how you kind of got to where you are today.
Yeah, I started when my roommates were watching Oprah. This is a long time ago. I was 21 at the time. Just graduated, just starting my first job. I was working at Research in Motion, if you guys remember that company. And yeah, so they were watching Oprah, and Robert Kiyosaki was a speaker, and he was talking about his then brand new book, Rich Dad Poor Dad. And that's what got me started. I mean, it took me down this whole path of real estate and real estate investing. It's funny, my mom is a real estate agent. My dad's super handy. He had a contracting business for a little while. But they never really leveraged that in terms of becoming real estate investors. They kind of understood flipping a little bit, but they never really made a proper business out of it. So it wasn't until, reading that book that I got started. I did a lot of investing in Waterloo because that's what I knew. I was a student there. Well, I guess graduated at that point in time. I got up to like 21 doors, and it was not the dream, right? Like, I think we all get pulled into being taught or told maybe that real estate investing is this passive income, dream, sunshines and rainbows, right? But it is not at all. And I was spending like evenings and weekends and dragging whoever was unfortunate enough to date me at the time up there to like paint rooms and fix doors. And it was just a nightmare. And about, I guess it's almost 10 years ago now, I was like, I want out. Like, I don't want to do this anymore. This isn't what I had signed up for. And, but before I did that, I said, okay, somebody must have figured this out. And I just networked as much as I could. I looked up every single meetup I could find online. I went on meetup.com. I like made the radius like a 2-hour drive radius from where I lived, and just tried to go to every single meetup and meet as many people as I could. And actually, that's how I ended up at Rain, which I know you're quite familiar with, Scott. I met a whole bunch of other investors and realized that I was not doing this strategically. I was very simplistic. I was looking at just individual properties. If they cash flowed, great, I would buy it. And I wasn't trying to understand scale or operations or leveraging expertise that I had in both market as well as, operational expertise in building a team. And that's when I met my now business partner as well, Matt, and we started consolidating our portfolio in Toronto because we came to this realization that we were getting better yields, one, in Toronto, and two, it was a much more sustainable business. I wasn't running to the LTB to fight with tenants. I wasn't, fixing broken doors because, they had a big party or something like that. Like, it was just a very different experience. Plus, I was making actually better money at the time, too. So it became a bit of a no-brainer, and we developed Volition sort of as this company that follows that investment philosophy, looking at blue chip investments, A++ neighborhoods, A++ tenant profiles, and trading returns for risk. Like, we're not going to return like Sarnia or some place, in rural Toronto, in rural Ontario, but a much more sustainable model, at least, for myself and for our clients. So yeah, that's kind of the origin story, as they call it.
I love it. I love it. It's you know what? Similar with me. I was living in Sarnia, and I didn't see
Oh, did I
Robert
just pull out Sarnia?
Kiyosaki. Yeah, yeah. I was. I I didn't see him on TV, but I heard about the book. I bought it. I read it, and I was like, I need to do this. And I really feel like it was the same as you. It was like, get as many doors as you can. And I got so many that it actually became a full-time job. But I was still making more because it was, doing mortgages, right? And with mortgages and, with real estate, right, you can make some really big paychecks. So it didn't make, like, I was like, what do I do? What do I pick here? And I just wanted it to be more passive. And it could have been if I had set it up properly, right? But I didn't know what I didn't know
Yeah.
at the time. And so now I know a lot more, and it's obviously much more hands off now. But it's funny that the stories are so similar, all from Robert Kiyosaki. That man changed so many people's lives. It's crazy.
Yeah, I mean, I still recommend that book to people as a great shift in mindset, right? Like if you're looking for a place to start and looking to get the right, mindset in real estate investing, it's still a great place to start.
Yeah. Yeah. And then he had a few other ones. I think one was called the cash flow quadrant. I don't know if you read that one with the
Yep,
EBSI,
I
right?
did.
So employee, business
Yeah.
owner. Yeah.
I was that guy going out to cash flow games, like they would set it up because it was a really expensive board game, right? So some people would like set
Yeah.
it up and get people to come over and play. That was me. So
Yeah. I
I was
actually
very
have,
into it at one point in time.
yeah, I actually have six board games because I think they stopped making them. I might be wrong, but there was like this massive
Oh,
blowout
yeah,
sale because I think you're right. They were like 100 to 150 bucks, and I got them for like
yeah.
20 bucks. So I was like, awesome. So I bought a
Oh,
bunch of them.
deal.
Yeah, yeah, but I have some. So you know what? Maybe next time when we're all in Toronto at an event, maybe we should bring it and just
Yeah,
just
we'll
play
have a board game party because yeah, we're cool like that.
it. It's a great game.
Yeah.
But no, that's awesome. So you've got a team now. You guys are rocking it in
Mm,
Toronto. Now I know lots of people right now they have concerns, right? And not everywhere. So I
mm.
don't want to make this as a blanket statement, but some people are concerned, with various markets. But I know you guys are rocking it in Toronto. So I'd love to hear like your strategies or maybe what you teach investors and how you can actually make money because Toronto is such an attractive market. Obviously it's got a higher price, but I've seen it appreciate over the years. Every single year that I've been in business doing mortgages, so 15 years now, someone was always saying, "Oh, Toronto's going to collapse. Toronto's going to collapse," and I heard it all the time, and it never did. Right? Obviously, there's soft landings and corrections with different things going on, but it's never crashed, right? And it's got so much awesome market fundamentals. I would just love to hear from you guys. Like, what are you doing to make Toronto work?
Yeah, I guess there's a couple of things. So the first thing is, really being an expert in what you invest. And this is not just a Toronto thing. I believe this fundamentally as any investment thing. My mom called me up one day and she's like, "Oh, son, I'm buying semiconductors today." And I was like, "Mom, what's a semiconductor?" And she's like, "I don't know." And I was like, "What business do you have investing in a semiconductor company when you don't even know what they make?" And it leads me to like, there's no, I believe you can make money in almost any market out there, but it really comes down to fundamental understanding about it, right? Like I like to joke, if you don't know the difference between High Park and Victoria Park and Moss Park, and you just think they're parks, don't invest in Toronto either because you don't have the expertise to make money there. Like you really need to know things at a street by street level or have a team to supplement that knowledge. Like that's very important. So
Mhm.
one, invest in what you know, I think is more important than chasing a shiny object. And I'm
Yeah.
born and raised Torontonian, right? So like I know the city very well, and I know, Garden Suites just changed again, so they're adding angular planes back in. Like you really have to understand to that detail because that's the difference between having a nice second floor and now just having a little loft upstairs, and that would impact your investment. So truly being an expert in your market. That's number one. And then two, taking a risk based approach to things. So, you know, after my stint at RIM, I started making my way into the world of finance. And the biggest difference I found in finance was they won't make a single move unless there is a litany of risk management behind it, right? Risk frameworks and SWOT analysis and all this kind of stuff that's done. But here in real estate, I don't know what it is. We just take this very simplified approach. Oh, the cash flows, great, buy. Like nobody else would do that. for any other investment. I don't know why we do it in real estate. So we have this framework that we use called TIME. It stands for tenant, investor, market, and estate. And basically, we evaluate our areas, our properties, our tenant profiles against that framework to reduce risk. Like that's very much what we're about. So, a lot of the concerns that I know people have with high prices or tenant profiles or whatever, they're valid concerns, but we have a risk mitigation strategy around it. We don't buy a property that cash flows on paper and then try to fill it with a good tenant. We look where are the best tenant profiles living in the city, and then we buy a property there, right? It's a very different mindset.
I
Always
like
with
that.
risk first, always with
Yeah.
yeah, like and that was me. Like 20 years ago, I was buying just. I remember I was sitting at this place called Mel's Diner. I don't know if it still exists. Like literally writing on a napkin with my parents, like, "Oh, like this looks like it works out," and that was it. That was my due diligence. Like 5 lines of math, really, and
Mhm.
that's can't fly. So, applying those two things, I think, is really big to making Toronto work. One, but two, using I guess three, using business models that actually work, right? Like you can't take a business model which you would apply in Sarnia and expect that to work in Toronto. Toronto's a more sophisticated market, and you need to have more sophisticated business models that work within that market.
Yeah. Yeah, no, I have a question. So I actually think that's a really great breakthrough that you said, and I'm going to highlight it for those listening in case they didn't catch it. But the fact that you buy where your tenants are, I think that is so crazy because most people just buy and then cross their fingers and hope to get someone good. So with your strategy, right, you're going to, nothing's perfect, but for the most part, you're going to avoid, issues with tenants. You're going to be going after people with money, right? Because you're specifically targeting them. So I love that. So
Yeah,
how does one get to that point? Now, obviously, don't tell us your deepest
yeah.
secrets for Toronto, right? We don't want to share that. That's what makes you you. But like, how does somebody start to find their ideal tenant like that?
Yeah, so I mean, first understand who your ideal tenant is. For us, our ideal tenant is 25 to 35, young professional, graduated from university, earning anywhere between like 65 to 85,000 a year. If they earn more, awesome. They don't own a car, they commute into work, so they're TTC or Uber reliant. Like we know a lot about our tenant profiles. And we know where those people like to live. So it's, some of the neighborhoods in and around the city, Little Italy, Little Portugal, East York, stuff like that. These, a lot of folks are like, oh, why don't they live in condos? They do. Like about 60% of them, 70% of them live in condos. But there's a good 30%, 40% who don't want to live in another box in the sky. And that number has been growing since COVID because many people are working from home. Many people are hybrid right now. And, living in 300, 400 square feet, live work is very tough on people, especially on their mental health. So they're looking for outdoor space, a balcony, which they can use, an extra bedroom, which they can turn into an office. And that's, in condo land, that's hard to find. And that's where our product has a niche.
I love it. I love it. So for you guys, obviously you're realtors, but what are your services like? What do you do beyond helping someone buy and sell?
Yeah, absolutely. One of the things that we really pride ourselves on is if somebody comes to us and says, "Hey, I want to buy an investment property," I think 90% of the people out there will be like, "Oh, go buy a condo." And maybe that's the right answer, but for the most part, it's not, right? So we really layer on financial planning along with what your goals are. So like the first question is like, why are you even looking at real estate to invest? What are you trying to accomplish out of that? And develop a whole plan behind a client to say, okay, maybe we start you in a duplex because you need a place to live. And we can make, right now actually, with some of the changes in CMHC rules, you can buy a duplex and have the same carrying costs as a condo, right? If you rent out one of the units, live in the basement, rent out the upstairs, not without sacrifice, on a cash flow month to month basis, you're actually ahead buying a duplex than you are buying a condo. Your outlay is less every month. So that may be the answer for somebody, right? Getting into duplex first. So taking it just beyond a place to live, but taking their place to live and turning it into investment. Or maybe it's a turnkey triplex, right? There are absolutely triplexes out there right now which are cash flow positive. People just assume because it's expensive that, it doesn't work. But, nobody looks at a stock and says the same thing, right? Nobody's like,
Mhm.
oh, it's an expensive stock, therefore it doesn't work. As a matter of fact, when it's cheaper, you're like, oh, it's a cheaper stock, there's risk. That's the same in real estate as well, right? Market
Yeah.
prices are high because they're reflective of the risk in markets. So,
Yeah.
there are, though, turnkey triplexes. You can just buy them, rent them out, and cash flow. So it really depends where somebody's coming from. I mean, we go all the way up to development. If somebody wants to do 4+1 development, we guide our clients through that process. I guess almost maybe 4+2 coming soon. So,
Yes. Hopefully.
um, so yes, like there's absolutely, we do the gamut.
Yeah. No, I just want to add on this because I think when people hear of Toronto, and you mentioned it, right? They think it's expensive. And especially
Mm.
if you're someone that works a 9 to 5, right? You might be thinking, how can I even afford to own something in Toronto? So I just want to outline. I mean, there's two ways that we can approve a customer. One is based on their income, where we're looking at all the income, and then we're looking at the property's income, and then we factor in all the expenses. And if the debt ratios work, you're good. Okay. But the other way, and this will be amazing for those investors that don't have the income, is we do the property approach. So it's more of a commercial style where we analyze how strong the property is. And if it covers itself, then you can get a maximum leverage loan regardless of your income level. So I just wanted to call that out here because it doesn't mean you have to live in Toronto and you have to have a job, from someone who's headquartered in Toronto. You can make a quarter of somebody an outside area compared to a Toronto investor. So you make 25% of their income and you can still qualify there using the right tools, right lenders, right resources. So I just wanted to outline that for anybody who's listening who might be thinking, "Oh, it's great that it still works, but I don't have the income to qualify." Well, we don't necessarily need that. So I just wanted to add that. But no, I love that you've shared that, especially the condos too. I do see a lot of investors, and I'm sure you do too, that they like the idea of the condo, right? They think of it as like, well, there's little maintenance, it's new, right? So it's going to rent for top dollar. But I'm sure you've seen it. I've seen it a lot, right? Where new investors they get these properties, and then 2 or 3 years later, once the property starts to need renovations or repairs, right? Those condo fees go sky high at that point. So they're like, oh my God, what worked in the beginning is no longer working now. And that's the only variable with condos that you can't control, right? Is the maintenance fee. And so you just
Yep.
got to watch that. But no, I love
Yeah,
it. So
absolutely. I mean, we've been pretty anti-condo for a long time. We've got a long history of every meetup that we've had recorded and put on YouTube. And you can go back and see, like, for at least 6, 7 years, we've been saying don't buy condos. There was one condo project which made sense, but that was only because we were able to get it at this extraordinary price because we knew the developers. But other than that, like, we have told people to stay far away from them because they just don't cash flow. And as a bank, why would you lend more and more money to a business where the bigger it got, the more money it lost, right? It just doesn't make sense. So, yeah.
yeah, I agree. And then you throw in things like rent control, right? Like what if you bought an existing unit and you can't raise the rent, but the condo fee has to go up because they need a new roof, or do you know what I mean? Like you just
Yep.
if rent control wasn't there, right, then it makes a little more sense. But it is what it is. So awesome. Well, listen, I
Yep.
really appreciate you. We got to wrap up because we try to keep these short. But
Mhm.
for somebody who's listening, how do they reach out to you to get going to purchase properties or sell properties in Toronto?
Yeah, most of our business is actually regular real estate. They want somebody with an investor perspective doing that. So we're always happy to work with non-investor clients as well.
Okay.
If you are interested in working with us, we've got a website, volitionprop.com. We're on Instagram and YouTube under Volition Properties, and you can always email us info@volitionprop.com.
Awesome. Thanks so much for coming. I really appreciate it.
Awesome. Thanks so much, Scott.
Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need.